the people that are sitting next to you that we lost our opportunity to shine in front of their excellencies. But you're all here still, and we hope to shine in front of you. So, Mark, it's always a pleasure to come and speak in a panel after the stalwarts have spoken, because it makes everybody's life simpler. And as far as I'm concerned, I will call it the 3R strategy now, because I'll just simply repeat, rehash, and reiterate everything that's been said. Because on a more poignant note, and I think that emotion was conveyed by quite a few of the speakers earlier on, it is indeed a poignant moment in our lives, because collectively in this room and outside, I think we represent the aspirations of what is soon going to be 2 billion people on the continent. 2 billion people whose average age largely will be below 20. They need to be fed, they need to be educated, they need to be housed, they need to be looked after, and they need to be employed. To me, the school I went to, they told me that when you see these parameters, you see investment opportunity. You see a queuing of investors wanting to seize what is perhaps once in a millennium opportunity. Yet, it is sad, isn't it? And I think we all feel it in this room, that when we look at FDI, when we look at private capital flows, Africa still lags so much behind. And what makes it worse, which is a point that one of His Excellencies made, is even our own domestic savings pool, our pension funds, our life funds, our sovereign wealth funds, our reserves tend to leave the continent and not invest on the continent. So it is a paradox, and it is a paradox that needs to change, because if it doesn't, we would have failed the next generation, and that cannot be right. So today we have in the panel with me 3 extremely experienced, erudite, and let's call it experts when it comes to mobilizing investments in Africa is concerned. Mark, is Adamasu on the virtual line? Right, so is he on? Okay, so thank you very much. So we do have 2 of our panelists in real physical form here, and the other gentleman in virtual form here. But I can assure you, they're all going to be in very good form when they start speaking. Adamasu, how are you doing? Good to see you, sir.
Very good to see you, Sanjeev. I'm very well and happy to be part of this joyous occasion.
Thank you. I will kick off with you, Adamasu, because when I looked at the average profile of the speakers, I think you are definitely the veteran in this group. So, Adamasu, please tell us, given the many hats that you have worn, including the one that you're currently wearing, what will it take for global private sector capital to embrace Africa? What will it take in your view? Simple question, keep the answer simple, sir.
Well, I think the essence of the answer is an open mind to listen and go beyond, of course, the curated knowledge that they've always held based on an incomplete picture that they have, right? So I think communication, engagement, roadshows, very important. I think we have a duty as fit-for-purpose financial institutions who understand the mindset of global investors to actually step out there and help people understand us the way we need to be understood. Because I think there's a huge lag effect between the reality of the perception that many of these investors hold versus what the true story is on the ground. And I think in the previous discussions this morning, we heard it from some of the presidents, where they talked about this huge anomaly where even ratings that speak to different realities don't actually result in the appropriate treatment of risk premium, right? You end up having a much higher risk premium despite that. So really, I think those of us who are, acting as bridges between the rest of the world and our continent, we know that it's all about engagement, and it's also about ensuring that you're constructed as an institution to be fit for purpose, fit for being a suitable intermediary for global capital. And that means, of course, there's a number of risk parameters that need to be borne in mind as we try to give comfort to global investors to come in. And there's a number of ways in which that can be done. And we've been at the forefront in our part of the continent to do this in a way that really does give the comfort. So we've had a lot of success in raising different types of capital, not just debt capital, but also risk capital. And I should just hasten to add, it's not just global capital from outside of Africa, it's also international African capital from different parts of the continent to come into our particular stable. But it all comes down to really the art of communicating and giving confidence to investors. And that is not just a story of putting out the right narrative. It's actually being able to communicate the reality of what we've achieved in Africa, all the successes we've had in improving the trajectory and the ecosystem for investments.
So, interesting. I don't know whether everybody heard you very clearly in this room, but I think 3 or 4 key points come out from what you said, isn't it? That the reality on the ground, and that's been talked about in the previous sessions as well, as far as investment experience on the continent is concerned, is actually very good, right? When we see the actual experience that investors go away with, the opportunities that still exist, clearly, as you said, Anuchu, there is a communication issue. There is an issue around making people understand the reality on the continent better. And that's an opportunity and a challenge for us. I'll come to you, Kim, because you, in your capacity as the head of Ebimula Capital, have mobilized and continue to mobilize significant amounts of private sector capital to come into Africa. What is the message you give them, Kim? Why do they believe you?
So I think it's right. It is about communication. I agree that there's this mismatch between perceived risk and real risk in terms of investing in Africa. We have been able to mobilize $1 billion in international capital, and we have invested that in Africa here over the last 3 years. So it is actually possible. But I would say what makes it a little bit more different investing in Africa, that is that you can say that the private capital system is not very advanced compared to other places in the world. And therefore, if you have to be successful in Africa, then you have to be on ground. You have to roll up the sleeves. You have to find good joint venture partners to work with, and you really need to have good relations and understanding of the risk involved.
Which I'll come back to, Kim. What you said is roll up your sleeves, get your hands dirty. Second is find the right partners and work with them. Anastasia, I want to come to you. You know, kind of digressing a bit, but not quite. The company that you founded and you run essentially actually caters to a very, very special need on the continent, which is around working capital and trade finance, which almost is the glue that needs to hold the continent together. So when you created this concept, when you talk to your investors to back you, and when you look at the opportunities on the ground, what are the risks and what are the sort of mitigants that you look for when you invest on the continent?
Thank you. Thank you, Sanjeev. First of all, I would like to share some of the comments that my colleagues here are making, that in order to scale the capital, the investments on the continent, first of all, we all need to strive to bring the cost of the capital down. And the only way actually to bring that cost of capital down is by creating more awareness, more partnership, and it's about collaboration, right? Because if the international perception of the risk in the continent is disproportionate to what the actual reality is, the continent, the local borrowers are getting penalized, right? And just I will give you a very simple example. It all starts from the sovereigns, from the states. If you look at the average cost of borrowing of the Pan-African sovereigns today, it's probably around 12-13% per annum. So, and if you compare that cost to the average cost of borrowing of the developed markets, it's a huge discrepancy, and that discrepancy does not match the actual risk. So if your sovereigns are borrowing at 12-13%, then what does it imply for your private sector? That needs to be a spread above that. Then what does it imply for your private equity capital and infrastructure capital? A spread even above that. So which corporate, which sustainable business model can sustain 20% or more cost of capital? None of it, none, right? So unless we fix this issue, you're not going to be able to scale the investments into the continent. And I'll just give you a couple of very important numbers. I'll pick up within the context of what His Excellency, the President of Ghana said. Just give you very important numbers. As of 2021, the IMF allocations to Argentina were $40 billion. The population of Argentina is 45 million people. IMF allocation to sub-Saharan African countries for 2021 is $34 billion. Population 1.2 billion people. Allocation per capita in Argentina, $900 per capita. In sub-Sahara, less than $30 per capita. That's a fact. And unless that changes from the very top by the leaders of this continent to rally and expose the truth to these international organizations that are supposed themselves to stay behind and support, how are you going to actually bring that private capital in this country, in this continent?
Fair comment, and I think it has been said that, and it needs to be said, that charity does begin at home. I think whilst we continue to be at the receiving end of clearly some strange behavior and perceptions from the global markets, it is also up to us to look within ourselves to see what we can do to generate our own capital to work for our own benefit. And this is one area where I think it is in our control and we need to do more. Adamasu, I want to come to you on this because you and I have spoken at many a panel about how to bring in the contractual savings part of the African continent, at least, the life funds, the pension funds, to work for Africa. Then of course you have the reserves and the sovereign wealth funds and their role to generate investments and capital flows into Africa. How do you think we can manage that? Because that is within our control and we need to do more of that.
Sanjeev, I had lost the connection. I'm assuming I'm on the floor. So thank you for that very suitable question, given this particular conversation that's going on. I think we all know that the risk premium that is imposed on our cost of borrowing from outside can be mitigated by African capital playing a little bit more of a strategic role to leverage, to help de-risk, and of course to also send the right signals. And so in that regard, I think there is a lot of room to maneuver in this particular aspect of things, where we know out of the $1.8 trillion of African institutional capital that sits across the various big institutional investors in Africa, central banks being a key one, but not the only one. Of course, we know pension funds and insurance companies and sovereign wealth funds. Between them all, we're sitting at close to $2 trillion. And I think most Africans are now acutely aware that we are not really putting our own African capital adequately to use. And this is really why the celebration of this milestone of 15 years for AFC is so important, because AFC represents a fresh business model where African capital is really being put to use in a very smart way, because AFC is leveraging global capital using African capital. And if you look at the ratings of AFC, it's very well rated.
Thank you.
It's amongst the highest rated African specialized development finance institutions. So I think this is just an example of what can be done. But of course, when you look at the amount of billions on the balance sheet of AFC, it's obviously a very good start, but it's nowhere near what it should be. And the same applies to TDB, because we're also investment grade rated. We've managed to do a lot by way of leveraging African capital. Not many people believed it was possible for us a few years ago, and we said we're going to bring in African pension funds, we're going to bring in African insurance companies into our shareholding, and use that as leverage to raise more debt and to improve our profile.
I'm going to interrupt you there, because unfortunately we are running out of time, but I think a couple of key points. As you said correctly, there are live examples of domestic capital within Africa working for Africa, your institution, our institution. We need to do more, clearly. Quickly, Kim, we'll wrap up with the final comments from you and then Anatas. Given where you sit, how do you see the role of foreign capital working in conjunction with African domestic capital and African institutions? How do you see the holy troika working? Because that has to work, isn't it?
Yeah, I think it's so our job as the private international investors is to mobilize the capital and promote Africa, not only because of good business, but also because we just need to create some jobs. We need to improve welfare, and we need to get to the full potential of Africa. Africa has 50% of the minerals, 50% of the uncultivated arable land and so on, and it's just a huge opportunity for the continent itself and for the rest of the world. But I think the most important thing to your question, that is that we continue to work together with institutions like AFC, also to educate the governments of what is needed in terms of bankability of the projects, in terms of long-term financing and funding, and in terms of security on the currency and convertibility and those kind of things. So that's really important work that AFC is doing also.
Important point, that the local institutions has to play the role of a de-risker, right? Final comments from you, Anatas. We will wrap up after that. You have the floor.
Thank you, Sanjeev. I think it's all about building bridges and working in a collaboration and in partnerships. Because from our experience, when we speak to our institutional investors, be it in the US or Europe or elsewhere, there is very little awareness and very little knowledge of how to invest in Africa. And for us to capture that money, to capture those investors, we here, this forum, we need to build bridges and we need to build partnerships so that together we can create this investment ecosystem so that those institutional investors from outside and within the continent can come together. And ultimately, it's up to us, all of us, to ensure that we support each other, because it's in nobody's interest that somebody fails or doesn't look good, because if somebody fails, that brings a very, very bad signal abroad. So it's, again, I would like to re-emphasize, it's in order to scale the investments into the continent, we need to do it in a partnership and collaborative approach, and that's why we're here.
Thank you. So I think the key word here is collaboration. I think there is an ancient African proverb which captures it well, which says, you want to go fast, you go alone. You want to go far, you take partners. And I think that is the nexus of collaboration that we need to create between foreign capital, local institutions, and local capital. Thank you very much, gentlemen, and thank you for listening to us. Mark, over to you.